This is the instructions for project 3. It says project 4, but I also use this in other classes, but this is project 3, which is budgeting and variance analysis. So what we have here, and if you're ever a manager, you are going to be doing most likely budget for your particular department or division or whatever. You may have sales, you may not, but this is similar to what's in the book. And this project really is about paying attention and paying attention to the details. Excuse me. So we have all the assumptions up here. All right. Sales volume increases 500 units each quarter, including Q1 of the next year. All right. So then here, then we're going to see the sales units increases 500 units. So this plus 500. Well, let's do this correctly. This plus 500. All right. Ending inventory is 20% of next quarter's budgeted sales. So ending inventory here is going to be 20% of next quarter's sales. So you see we've got this automatically figured here. So really you just have to spread this formula. And then somehow you're going to have to put out here either a formula that goes, well, since it's going to increase, you assume that it's going to increase another 500. So really that's going to be 17,000 times 0.2. And so that's going to have that impact on those numbers. And in sales revenue, it's already figured out based on cost of goods sold. Price per unit, you can see, is going to be pretty consistent. Unit cost is 45% of sales price. Sales price is $250 per. So you just assume that. And that number you can spread. And so you're going to have these numbers, but for now I'm going to block these out. Okay, so expenses. Salaries. What are salaries? Salaries are 25% of sales. All right, so we go 0.25 times the sales amount, and that's 937,500. Commissions are 5% of sales, so 0.05 times sales amount. And then we have benefits. Benefits are 25% of salaries. Not sales, but of salaries. So that's a salaries figure right here. And then we have rent. Rent is $50,000 per quarter. So you would spread $50,000 to each quarter. Utilities. Utilities are $5,000 per quarter. So you would spread $5,000 per quarter. And then supplies are 1% of sales. So there you have it. So now operating incomes. This you will need to put in, but operating income, of course, is gross profit of 2,062,000 minus your total operating expenses. So gross profit is 610,000. Now, what is the gross profit percentage? Gross profit percentage is gross profit divided by sales. So the gross profit percentage is going to be 16%. Depreciation. Depreciation is 20,000 per quarter. Interest expense. Interest expense is interest expenses are 1% of sales. So again, 0.01 times your sales amount. All right. taxes. Income taxes are 20% of earnings before taxes. So 20% of this figure and then the last thing here is going to be uh, net income percentage. Net income is net income divided by sales. 12%. Okay, so you're going to be doing this for each of these different quarters. I've pretty much done it for the first quarter, and you can see. So you'll need to, of course, sum up this figure here. All right, so all of these should be filled in. Don't forget to put in your operating income and your operating income percentage. And then we have a variance, okay, and this is project 3 or 2. And this is just simply, okay, what is the variance? Well, is it positive or negative? It's here we've got $100.85 per pound is the direct materials standard. Direct materials efficiency is 125. So we are wanting to know how much is actually used. Well, 750 out of 65,000 units. So we can look at this number divided by that, and it will give us the actual amount of paraffin uh, per unit. And so that will tell us whether we're under or over the 125, and we multiply that by the standard cost here, and that will give us the materials variance. And then the actual cost of the paraffin is just going to be this divided by the number of pounds and give us the amount. And we just need to know whether that is positive or negative and multiply that by the actual amount used. And we have the efficiency or materials variance. So the first one was the efficiency variance, the second was material variance. The two added together would be the total variance. And so that is what's required for this project.